I grew up in this business as a fundamental investor, and there was a period of time 30 years ago where you could focus only on fundamentals and not have to worry at all about the macro. Those days are long since past.
I think our investor base is quite interested in what's going on in the Canadian economy. I think we're at a unique and interesting point.
And so from our standpoint, I think it's really important to ensure that portfolios have some notion of macro positioning along with fundamental positioning.
As one of the leading wealth management firms in Canada, we focus on providing our clients with a way to enhance their wealth and enhance their knowledge. And one of the ways we do that is having these exclusive events.
And I think there's a wide recognition here that we do have on stage really the best macro minds on Bay Street. So Doug Porter from the Bank of Montreal is going to cover NAFTA and trade.
I actually do believe that the U.S. is serious about getting a deal on NAFTA, and of course they want to get a deal on their terms. The issue is, of course, going to be getting from here to there, and I still think there's a huge hurdle to get there.
And Ben Tull from CIBC is going to cover housing.
This is just a slowdown in a trajectory, and this, in the GTA, it's all about policy. We simply don't have enough supply.
We've got Craig Wright from the Royal Bank, who's going to cover fiscal issues.
As we go forward, the challenge is if you're committed to spending, you don't have room for a competitive budget because it's going to cost you tax dollars.
Francis Donald from Manulife, who's going to cover the Bank Canada.
What impact do those 3 prior rate hikes have on the total economy? And this is actually really, really challenging for any economist to measure.
And David Doyle, last but not least, is going to cover the Canadian dollar.
And I think what we're in for kind of over the next, call it 18 to 30 months, is that Canada is going to be paying the price for what I call the hyper-leveraging cycle that we went through from 2001 through 2016, 2017.
So much of what is going on in the economic environment in Canada today is very dependent on what's happening globally. We have long held the view at Gluskin Sheff that diversification is the single best form of being able to think about how the opportunity set exists, not just within Canada, but actually outside of Canada.
And we think that if there are opportunities in fixed income securities, if equity prices continue to reflect weakness, there is a risk that credit spreads will widen. And if they do, we will certainly look for investment opportunities in the names and the part of the capital structure that we like.
Because I think the big thing for us as investors and at Gluskin Sheff is there's always going to be opportunities. There's always going to be places where you can make smart investments, you can allocate your capital and get a good, decent return on capital. I would hope people would walk away and say, wow, I hadn't really thought about that perspective, but what that means is the opportunities must be over here or here. That's what I hope people take away.